Hey everyone, Scott Kuru here with a daily property update. I'm going to be unpacking for you new research from KPMG, which is going to shed light onto the property market for you. So if you want to be a property insider and invest like the professionals, like the top 1% of investors in the country, then you want to hit subscribe so you get these videos every single day. I do a 3 to 7 minute video every single day on the property market so that you can stay up to date and become a property insider. Now let's actually delve into this brand new report from KPMG. Now KPMG are one of the biggest accounting firms in the country. So in this KPMG research, they asked a simple question. If you're a typical first home buyer household, how much of the market can you actually afford? So out of every 10 properties for sale on the market, how many of those 10 properties do you actually have a budget where you can walk up and realistically have a shot at buying that property? So back in 2019, 2020, they did this research and they assumed a first-home buyer household income of about $150,000. Now, on that income, you could roughly afford to purchase 30% of homes across Australia. So out of every 10 properties for sale, 3 of them, you realistically had a budget to be able to buy one of them. Now, fast forward to today, 2025. Now, that same household is on about $180,000 today. It's a bigger pay packet. You can afford to pay more. You've actually got a bigger borrowing capacity. So you'd think, all right, we've moved up in the world. We're actually earning more money. We should be able to buy something decent. Now, on $180,000, you can now afford just 12% of homes. You are earning more and accessing less than half the market you could 5 years ago. Now, that really is insane. Now, all the numbers suggest that this is likely to get worse before it gets better. Now, I will break these numbers down state by state so you can take a look at it, but ultimately, what does this mean for property investors and property insiders? Well, what it means is more of the Australian population will be stuck renting. Okay, now, when you're a property investor, you are in the business of providing accommodation to renters. So while this is tremendously bad for society, because what this means is more and more people will not have the opportunity to be homeowners. More and more people will be stuck renting for longer, and many people will rent for all of their lives. Now, in an environment where we've got a massively growing population and bottlenecks on delivering brand new supply, brand new constructed properties to meet that growing population, being a landlord, being a property investor, becoming a property insider means that you can fast track your wealth, you can build more wealth than what you could in previous years. So let's just take a look at this state by state. So on the screen, you're going to see a chart. Now, those blue bars are 2019, 2020. The orange bars are now. 5 years ago, for example, in South Australia, a first-home buyer on 150K could reach or could afford about 75% of all homes. In Queensland and WA, it was around 60%. In Victoria, it was around 15%, and New South Wales was already bad at 5%. Fast forward to now, with incomes up to 180K, SA, Queensland, WA are all roughly down to just 25%. Victoria is down to 10%. New South Wales is still sitting at 5%, which basically means it's hit its pain ceiling. So in previous years, in years gone by, the cheap states, Adelaide, Brisbane, Perth, have joined Sydney and Melbourne in the same mess. You've gone from having most of the map open to you to fighting over the last few patches of yellow. Now you might be thinking, yeah, Scott, okay, what about the 5% deposit scheme? Doesn't that help? The short answer is it helps a tiny group and pushes everyone else further back in line. Cotality, formerly CoreLogic, mapped where you can actually buy under the scheme's price caps. Here's the reality in plain English. Most homes under the cap are 30 to 40 kilometers from the CBD. That's 45 minutes to an hour each way. Units under the cap are mostly in investor-heavy pockets already bidding prices up. So yes, the scheme gets you in, but it often pushes you far from your job, your family, your lifestyle, your support network. You're not getting ahead, you're being pushed out to the edges. Okay, so this is a great environment for property investors, people trying to build wealth through property. Terrible environment for society and the community in general, especially if you're trying to get your foot on that ladder. You don't already have parents and grandparents that have owned property. They haven't got equity or loans they can give you to help you get a foot into the market. You're literally trying to get into the market. So how do we get here? Well, basically, firstly, prices sprinted While wages have been jogging since 2020, New South Wales is up about 40%, Victoria 20%, Queensland and SA up around 80%, WA up around 75%. However, wages did not grow 40 to 80%, so prices have grown, but wages have not. Now, in addition to that, affordable new builds have vanished. Where is the bottom rung of properties? The affordable rung of properties where people can have an opportunity to get onto the property ladder. It doesn't exist anymore. KPMG found that new homes priced under $800,000 have collapsed as a share of what's being built. A couple of years ago, about 1/3 of new dwellings were under that line. Now it's closer to just 12%. Why is this? It's because builders went broke, costs spiked, and developers shifted to premium projects where they can survive and actually make a profit. There's no profit in building affordable property. That means there's less starter product, less homes at the beginning of the property ladder, the affordable end of the ladder. These properties don't exist anymore. Now, immigration also came back hard. When the borders reopened, people didn't arrive slowly. They surged back in. We had a lot of people here which never left, which would have otherwise left. But we also had a lot of Aussies come back to Australia. A lot of new arrivals to Australia rent first, which pushes up rents, then some buy. All of this is extra demand on a market that was already short of homes. Now also, government schemes pump demand without fixing supply first. We ignored supply, pumped demand. The first home guarantee is an example. The 5% deposit scheme is an example. The shared equity scheme is another example. The intentions might have been good, but all this did is pump up demand, but did not address the supply issue. And by the way, all of this demand is attacking the same end of the market, the affordable end of the market. Not that it's even affordable, but what's left of the affordable market. Ray White data shows that the bottom quartile of prices are up 34% since early 2023, beating the middle and the top in terms of price growth. So the very segment those schemes target is the one rising the fastest. The first people who get in might win, but for the rest of everyone else, people that are not ready today but might be ready in a year, 2 years, 3 years to get their first home, they're actually going to get priced out. So for property investors, property insiders, if you're an investor, this data is basically flashing a giant sign. Entry-level stock is under intense pressure. The affordable quartile has already outperformed. Ray White expects this to keep going as more first-home buyers are pushed into the segment. So what does that mean? The best time to get in was yesterday, guys. The second best time is before the next wave of buyers jump in. So guys, I want to hear from you. If you're a first-time buyer, do these numbers match what you're seeing when you actually go to inspections? And if you're an investor, does this make you more confident or more nervous about getting in? Drop your thoughts below. I love your comments. I read them all, guys. And as always, this is your daily property update, your 3 to 7 minute breakdown on the Australian property market every single day so you can become a property insider and invest like the top investors. Make sure to hit subscribe so you never miss a video.